the risk with your money, so that you know. And we're not risky people. I absolutely hate not being able to sleep at night, negotiate very good deals, so that when I say good deals is that we're able relatively quickly to In this video, we're going to talk about Andreas Capital, how it works and what it is for, so you'll understand the basics of it. Basically, Andreas Capital is a capital fund that is being thought of in order to invest in UK properties and properties in general. So how do we, first of all, is how is the capital secure? The capital is secure because what we do is we use that money for two main purposes. One is to actually put it down as a down payment when we buy real estate. Normally we try to negotiate very good deals, so that when I say good deals is that we're able relatively quickly to refinance the deal and pull the money back out, so that whatever you give us is there available in our bank accounts relatively quickly if you want it back. So it's secure because of that. And also one of the other questions is how you actually get the interest. How do we pay you the interest? Where do we find the money for the interest? Very simple. We already have a number of properties that cash flow positively. So every month they generate income, positive cash flow. So when we receive your cash from your investment into Andreas Capital, we calculate, and we'll show you how we calculate it. We can actually do it yourself, that interest, and give it to you monthly through standing order, and we take it off the money that comes in through our existing real estate. So that is taken care of. And normally our amount of borrowing actually is always, when we have to pay interest, we make sure it's less than our current positive cash flow, in the region of maximum 50% of the positive cash flow. That is to say for example, we're cash flowing £4,000 a month. We make sure that we only have to pay for interest back to you £2,000 most. So we don't go over a certain threshold, because we want to be able to sleep well at night, because if we go higher than that, if tenant doesn't pay, something goes wrong, then we're running into troubles. So we might make sure we're quite conservative. We make sure that we are borrowing in terms of interest less than a tops 50% of our cash flow. So how do we make money? So using your money, very simple. We know how to invest in real estate, and normally when we put money down on real estate, the money that we get back is in the region of 20% return on investment, or more, sometimes 15, really depends. But the interest that we pay you is less. So by using your money, we leverage your money to get extra return on investment. Say for example, if we pay just 7% and we get a deal where we get a 15% return on investment, that difference, 15 minus 7, is 8%. We get an 8% positive cash flow on money that we don't actually have, your money. So this is how we make money out of it. If you want the principal, I mean, when we're talking about loans, we've got the interest and the principal. The interest is the amount that we pay to you on interest on whatever you gave us, and the principal is the amount that you give us. Say for example, you give us £10,000, the principal is £10,000, so this is the amount that is owed to you when you want it, and the interest is whatever the interest is, and £10,000 is at that rate, so, and that we pay you monthly. Now when you request your money, very likely we already have the cash in the bank, so we can actually give it to you quite quickly. But if not, unfortunately you have to wait up until the end of cash recycle, when we refinance on the property deal that we've been working on, and we actually got the cash from the refinance, the bank refinancing, and can give it back to you. In the unlikely case where, and it can happen, where the cash is still trapped into the house, so the house, the investment in real estate. What we mean by that is that through refinance we couldn't get all the money out, then we have to wait a little while in order to actually get a positive cash flow to pay also the principal back. So the risk with your money, so that you know. And we're not risky people. I absolutely hate not being able to sleep at night, so I'm very careful with other people's money. When do I get it? So you actually make your requests, look at the terms and conditions and how that works, and so on. When do you get paid your interest? As soon as you give us the money, a month after, you're going to get paid by bank standing order. We try to work out so that you're going to get paid every first of the month, because this is our payday, every first of the month. We get people paying us rent, and you get your money at the beginning of the month as well, through standing order. So how do you calculate the interest rate? So basically you can do this exercise together when we're actually agreeing on a loan. We're going to go into a mortgage calculator, interest-only mortgage calculator, put the interest rate that we're borrowing at, and you'll see the amount of interest due to you monthly yourself. So it's very, very simple. And mortgage calculators are found online quite easily. So hopefully that clarifies Andreas Capital, and you find this video enjoyable, and we hope to make your money work hard for you.